Hey guys, hope you are all having a great day. Today we had a crazy day in regards to news. Ryan Cohen, the current chairman of GameStop, revealed that he bought a stake of nearly 10% in shares for Bed Bath & Beyond, though his investment company RC Venture, but that is not even close to the end of the story. We have much to discuss in relation to the markets and other very important updates, so without further delay, before we start, let me quickly state that I am not a financial advisor, and that all content discussed in this channel is simply information gathered that I deem important for people to know, so that they can make informed decisions. All efforts are aimed to better understand the nature of the current market in anticipation of the greatest squeeze in financial history. Let's dive right in. Ryan Cohen caught everyone by surprise today, making headlines in all major financial outlets after Bed Bath & Beyond shares jumped over 34%. Ryan Cohen bought a 9.8% stake in Bed Bath & Beyond. Being a top 5 shareholder for the New Jersey chain, Cohen also wrote a letter to their board where he states that he believes the retailer struggles to reverse market share losses while navigating its supply chain woes. In this letter, Ryan Cohen made serious criticism towards the top executives for taking excessive compensation during periods of underperformance. Quoting directly from the letter, Cohen said, "We believe Bed Bath needs to narrow its focus to fortify operations and maintain the right inventory mix to meet demand, while simultaneously exploring strategic alternatives that include separating Bye Baby and a full sale of the company." In response to the letter, Bed Bath said they will be carefully reviewing the things Ryan Cohen complained about and that they hope to engage in constructively around the ideas they have put forth. For those that don't know, Bed Bath has been struggling financially these past couple of years. They have also found themselves making headlines in controversies with their workers. Ryan Cohen made sure to tell them in the letter that their scattershot strategy isn't working, and that the company could be better suited with a private equity owner. He also remarked that the company's Bye Baby chain could be worth several $billion. Bed Bath & Beyond shares have dropped nearly 45% in the last 12 months, and had a market value around $1.6 billion as of Friday. There has been previous opportunities where private equity wanted to purchase Bed Bath in the past, and no suitors emerged, making the sale of this company less likely to happen. Bed Bath needs to improve operations, speed of delivery for online orders and their inventory mix, which are all lagging behind its competitors. Ryan Cohen suggested that the company has to start aligning leadership compensation with results to begin with. It will be interesting to see how Bed Bath will evolve now that Ryan Cohen has some leverage into how the board will make the decisions. I find it very good and bullish for the company that finally someone is calling out the leaders for getting overpaid while underperforming all these months and years. People are saying this is it, this is the final move before we squeeze, and I could not disagree anymore. This could put pressure on shorters if the company does manage to start making changes that will turn around the business and make them profitable or at least start generating more revenue, but until that happens, I doubt this will have any real implication and fundamental change. Bed Bath was and has always been a meme stock, but I will continue to focus on GME and AMC as they are the stronger plays. I do wish the absolute best for Bed Bath, however, and if something significant happens in the future that ties it up to Ryan Cohen or the whole squeeze play, I will 100% cover it. I am bullish, but do not get carried away by emotions from people celebrating this as if it somehow elevates GameStop or AMC and has now fully trapped shorts. Shorters have been trapped way before even January of last year, so don't let them make this have any more meaning than it does. Moving on from this, GameStop announced the release date for their fourth quarter and full year fiscal 2021 results. These results will take place after the markets close on Thursday, March 17th. The company will host an investor conference call at 5 p.m. Eastern Time on the same day to review its results. Big news came out from Immutable X, who on a tweet, announced they have raised $200 million in Series C funding for a valuation of $2.5 billion. They also said they are supercharging their mission to make NFTs mainstream through high-quality blockchain games and more. Again, this is super bullish for GameStop and shareholders, but people took this to mean much more than what it is. I saw people somehow connect this to now Riot Games getting ready to start selling content through this new market. People don't even understand what they read and make and blow things out of proportion. Yes, Immutable raised $200 million and Tencent was part of it, but that does not mean Riot will not be selling their game content through GameStop's NFT platform. Still, I am super happy for Immutable and super jacked for GameStop. I ended up buying 70 shares today when it dropped to $101. It will be interesting to see how the launch of this new NFT marketplace goes and how much revenue it will bring GameStop. Even more interesting than all of this, the SEC decided it would be a good idea to release a take that states, "Say no go to FOMO." I kid you not, some boomer staff member decided it would be a good idea to release some goofy take. The article begins by trying to level with the audience, saying we have all felt FOMO at some point, but that one must curb such feelings and keep in mind the phrase, "no go to FOMO," so that you can make better investment decisions. Now, I may sound a bit like a shill, but I agree. One should never ever make an investment decision based purely on FOMO, as it is a recipe for disaster. The issue with this post comes when in the very next paragraph, the SEC started talking about crypto and meme stocks, making it seem as if these are merely internet plays with little to no reason to buy. Meme stocks are indeed very popular in some parts of the internet, but the real value to them is actually very fundamental and technical as well. Though data that has been rigorously compiled for over a year, we have been able to look at how the stocks trade and what happens with the buy orders. We know for a fact that more buy orders come out that sell orders by retail traders, who own the vast majority of the stocks. This alone should have the prices for these stocks way higher than what they are. We also have evidence that shows that through derivatives such as swaps and options, hedge funds continue to push and repackage their positions so as to delay and giving the impression they covered. The system is very complex and it's built that way so that hedge funds and banks and other institutions can slide through the cracks and impose a larger than balanced leverage on everything happening. I find it incredible that after all this evidence is talked about almost daily, the SEC shamelessly releases this poorly written article trying to use meme stocks as a great example of what a FOMO play is. Yes, some people feel FOMO when buying meme stocks, but that could be argued to be the normal sentiment with all market participants. The way investing works is by having investors that look for the most undervalued asset to purchase so that they can maximize gains once the price goes back up to meet its real valuation. It is a fear of mission out of sorts that makes investors seek out undervalued or oversold securities to swing and ride up. The SEC continues to embarrass itself and continues to paint meme stock investors as the pun of the joke, the pun of what bad investing is, when everyone who got in early is still sitting at profits right now. Finally, let's talk about the stock market. Stocks ended lower as investors continued to sell off as the situation in Ukraine and Russia continues to worsen. This was by far the worst day for the Dow Jones and S&P 500. Tech stock heavy Nasdaq was crushed very ugly today. For the most part, energy stocks made up the vast amount of the only plays that were bullish. Bed Bath also surged heavily in the pre-market after news came out about Ryan Cohen buying nearly 10% of the entire float. The Dow closed 2.4% down, S&P 500 fell 3% and Nasdaq crashed 3.6%. The Russian ruble plunged to a new record low against the dollar. At one point, 155 rubles were worth a single dollar. Companies in finance, travel, entertainment, retail and construction industries all fell. Oil prices increased sharply, with Brent crude oil soaring past $137 per barrel, building on gains over the past several weeks. The West Texas Intermediate crude oil rose as much as $13.50 a barrel too. What led to this dramatic shift was the news that came from the White House and European nations as they announced they are weighing in on banning imports on Russian crude oil. The United States receives a very small portion of energy products from Russia, with about 7.9% of total petroleum imports as of 2021, but Europe is going to be affected way more since their exposure is much higher. It was a very bearish trading session, and unless you were holding on to energy stocks, you must have had a very bearish trading session. However, if you think you have had it bad, remember to be grateful you aren't in Russia. Russia, as of today, is more sanctioned than North Korea and Iran right now. Today reports came out from an FSB whistleblower saying that the war has been a total failure, comparing it to the collapse of Germany in 1945. The report actually confirmed that the Russian dead count is already at 10,000, though the Russian Defense Ministry only acknowledges the deaths of 498 Russian soldiers in Ukraine. The report says that the FSB, which is the successor agency for the KGB, is being blamed for the failure of the invasion, but that it had not been given warning of it and was unprepared to deal with the massive effects of crippling sanctions. The report gets even darker, saying that the government doesn't even know the true figure of the dead because they have lost contact with major divisions. The report says officials are acting intuitively, on emotions, and that by and large, Russia has no way out, as there are no options for possible victory, only defeat. The report says that even if Zelensky were killed, Russia would have no hope of occupying Ukraine, as even with minimum resistance from the Ukrainians, they would need over 500,000 people, and that's not including supply and logistic workers. And this is where things get really spicy. The analyst said that the Russian Foreign Intelligence Service was trying to dig up dirt to claim Ukraine had built nuclear weapons as a pretext for a preemptive strike. The war, the writer said, has been given a provisional deadline of June because by then, the Russian economy will have collapsed. The right says, and I quote, "Maybe it's from overwork, but I feel like I am in a surreal world. The Pandora's box has been opened." The author says they cannot rule out internal conflict and that they are expecting some advisor to convince leadership to send an ultimatum to the West threatening war if sanctions aren't lifted. Essentially, it is plausible that if sanctions are not lifted, and Russia does not back down, they will unleash a full-out war on the West, which unless nuclear weapons are used, Russia is about to lose their entire armed forces. They cannot win against Ukraine alone. Imagine what will happen if they get dumb enough to attack NATO. All in all, the real victims here will be the people of Russia, Ukraine and everyone else. Already impoverished, these harsh conditions have made hell for them for generations to come. I decided to issue this segment to give you guys a proper update on everything going on. I am in no part a geopolitical expert, and this is just me summarizing the most important parts of a leaked FSB document which details the current situation as it develops. Let's now talk about today. The Fed submitted over $1.461 trillion in reverse repo operations today. Dark pool trades for AMC accounted for 46% of the total volume today, while dark pool trades for GameStop accounted for 40% of the total volume today. AMC had a larger amount of buy orders than sell orders, with GameStop also having a larger amount of buy orders than sell orders. Now, let's talk about performance. AMC had a bearish performance today, losing over 8% for the day. It had a weird pre-market performance. It began dipping to 15.80 and then running up all the way until markets opened. Upon market opening, AMC began dipping, staying below the VWAP and falling pretty much for the remainder of the day, going as low as 14.90. AMC closed at 15.10, below the VWAP. AMC could find support at 14.66, 14.30 and 13.80. Resistance could be met at 16, 16.50 and 17. Hard to think about what could happen tomorrow. Stay zen about the daily movement unless you are looking to buy more. GameStop had a bearish performance, losing over 11% for the day. It began moving up in the pre-market, running past 114. Upon market opening, GME began dipping for pretty much the remainder of the day. It went as low as 96.10. GameStop closed at 99.35, below the VWAP. GME could find support at 96, 94 and 91. Resistance could be met at 104, 107 and 112. Stay zen, buy the dip and hold. Thank you for making it to the end of the video. That is all I have for you guys today. Let me know your thoughts down in the comments below. And most importantly, remember to come join my Discord. If you want to support this channel, I have a Patreon link in the description as well as some one-time donation links for Cash App and PayPal. Thank you again for being a part of this channel. I will continue striving for better content. Enjoy the rest of your day, keep on buying the dip and to the moon.